All right, today we're jumping right into the latest numbers for the Tokyo area's Consumer Price Index. These are the fresh figures for February 2026.
Hello, this is the Japanese Economic Review Channel. And let me tell you, these numbers we're about to unpack are a super important early indicator for Japan's national inflation trends. So understanding what's happening in Tokyo gives us a sneak peek at where the entire economy might be headed. So here's how we're going to break it all down. First, we'll hit the big picture headline numbers. Then we'll dig into what's actually getting more expensive and what's getting cheaper. We've got a special section on the energy price story because, wow, it's a big one. And finally, we'll pull it all together and figure out the key takeaways.
Okay, first up, let's get right to it. Section 1, the headline numbers. This is our essential top-level view of what's going on with prices.
The big question, right? What is the data for February 2026 actually telling us? Let's walk through the three key figures from the official report.
First, here's the main number, the one you'll see splashed across the headlines. The overall CPI is up 1.6% compared to this time last year. This is the broadest measure. It covers that whole typical basket of goods and services.
Okay, but now things get interesting. When we start stripping things away, the picture changes. This is the core CPI, and it's up 1.8%. We take out fresh food here because, prices can swing wildly because of the weather. This gives us a much clearer look at the underlying trend.
And here we have it, the core index. This is the one economists really pay attention to, and it's up 2.5%. This number takes out both fresh food and those volatile energy prices. A number this high, well, it suggests there's some real persistent price pressure building up in the rest of the economy.
So how does this 1.6% figure fit into the grand scheme of things? Well, take a look at this chart from the official statistics. It puts it all in context. You can see that while it's a little tick upwards from January, the overall trend has been cooling off from those highs we saw back in 2025.
So we've seen the top-line figures, but what's actually driving those numbers up? Let's move on and take a look at the specific things that are costing people more.
The data shows price hikes in stuff we all buy. Food is a huge one. Sweets are up almost 8%, and get this, chocolate prices alone shot up over 26%. And if you love your morning coffee, you're not imagining it. Coffee bean prices have absolutely soared by 64%. We're also seeing climbs in things like rent, mobile phone bills, and even the cost of staying in a hotel.
But wait, that's only one side of the story. There are some really powerful forces pulling that overall inflation rate down. So let's flip the coin and see what's actually gotten less expensive this past year.
And here's the other side. The biggest push downward is definitely coming from energy, with electricity and city gas prices dropping significantly. We're also seeing some major relief at the grocery store for fresh food. Cabbage prices dropped an incredible 43.6%. And then there's this huge policy-driven drop in childcare fees, which is a massive help for families.
That drop in energy prices is so dramatic, and it has such a gigantic impact on the headline number that it really deserves its own section. We've got to dig into this a little more.
Just look at this graph from the official report. You can see that massive nosedive in the electricity price index over the past year. It's so clear that government subsidies and other factors have had a huge effect here, really dragging down that overall inflation rate. The numbers are just wild across the board. We're not just talking about electricity. City gas is down 9.5%, and gasoline has seen a massive 14.7% drop compared to last year. These are, without a doubt, the single biggest things holding that headline inflation number down.
Okay, so we've looked at all the different pieces of the puzzle. Now let's put it all together in our final section and figure out what this all means. What are the key takeaways from this whole report?
So what we're really looking at is a classic economic tug of war. On one side of the rope, pulling prices up, you've got the rising cost of everyday food, rent, and phone bills. But on the other side, pulling prices down with incredible force are those heavily subsidized energy costs, plus some good luck with the harvest and those policy changes. So here's the bottom line, the most crucial point. While that headline number of 1.6% looks pretty tame, it's being heavily suppressed by falling energy prices. That core inflation rate of 2.5%, that tells us the real story. Prices for most other things are still rising pretty strongly. This report is really showing us an economy with two completely different stories happening at the exact same time. And that leaves us with the million-dollar question for the future, doesn't it?
You've got this deep split between rising costs for services and goods and this powerful downward push from energy. So as those energy subsidies eventually start to fade, which one of these forces is going to win out and set the course for Japan's economy?
Thank you for watching the Japanese Economic Review. We look forward to having you with us again.